What's making headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines, and Happy New Year. If you're just tuning in, we did do our first one last week with my colleague Julian Barnes from Broker Daily. But if you're only just coming back, then welcome back and Happy New Year. Hope you had a fantastic holiday. It's Annie and Ben back here in the studio. Ben, how was yours?
Yeah, it was a great break. It goes by so quickly, I guess, but it was a decent stint also away from the desk. So
Couple of weeks off from mortgage broking news.
yes,
But back into the thick of things this week.
Yeah, and it's been pretty, all things considered, straight back into it. Lots of things going on, really.
Loads of things going on. And I think the first thing that kind of, I guess, a lot of people would be thinking about will be all of the climate disasters that we've had recently. I mean, I think last week particularly, we had the Queensland cyclone and all the flooding, flash flooding. And then we had the bushfires in Victoria and flooding in Victoria yesterday, I think, as well. Flash flooding in Victoria, I was reading this morning. So lots of extreme weather events taking place. And of course, lots of brokers keeping busy telling their clients what kind of support they can access if they have lost their home, because lots of devastation going on. I think from what I've been sort of reading from the coverage from the police and the Bureau of Meteorology and all the sort of first responder units, is that most of the people impacted both in Queensland and Victoria have sadly been cattle farmers. Yeah, so lots and lots of cattle being lost. And I think they really had, big losses in the bushfires in 2020. And this, I think, according to reports I read a couple of days ago, the biggest loss of cattle since then. So lots of farmers in particular really needing support from their lenders for maybe repayment holidays or emergency funds. I know the government stepped in as well to offer some grants. So if I just sort of quickly go through some of the grants and sort of support available. So for the Queensland flood victims, this has mostly been up in the top northwest, I think it is, northwest of Queensland, up in sort of the Cloncurry Shire area. And they had a year's worth of rain in something like a day. Yeah. So really 800 millimeters of rain they've had since Christmas. And that was at the time of reporting earlier this week. So a huge amount of water coming down the roads, flooding out the local airport up there, and of course losing a lot of agricultural land. And many lenders have sort of been saying, you can kind of reach out to us. We're obviously really good at doing that. But the government has also said they'll be making support available. So they're doing things like low interest loans. They have an interest rate of 2.1% of up to $250,000. They're also doing millions of dollars in disaster recovery efforts to help rebuild. They're providing grants to farmers, including upfront payments of $10,000. And a lot of that is for people in the sort of Richmond, Winton Shires, Flinders, Cloncurry sort of areas, all those farmers. And they're also doing things like helping them purchase fodder for the cattle. So lots of support going on. And then similarly down in Victoria, where all the bushfires have been taking place and the flash flooding, we've been hearing from the banks again. They were very quick to say, make sure you reach out to your lender if you need some emergency funds, or if you need a repayment pause, if you want a credit card pause. And again, looking at, making sure that people are staying safe and being able to have a bit of a breather if they need to, because of course there's a huge loss of property, loss of incomes, and in some cases loss of lives as well.
And the lenders are generally pretty flexible when it comes to things like this, right?
Yes, I think most of the banks, the ABA, the Australian Banking Association, always comes out pretty quickly, as do the major banks as well, saying, reach out to us, reach out to your broker and talk about what sort of things you might need. I think particularly when it comes to emergency funding for, they might need shelter for the night, or they might need to, if they've lost all of their property or they can't get to their property, they might need things like, clothes and sort of basics. So I think there's lots of grants available, but particularly I think if you have lost your home and you've got a mortgage on it, you kind of need holiday from repaying your mortgage for a few months while you kind of reassess what you can do, while you look at what your insurance is doing. The insurers as well have been pretty active in reaching out to people and saying, make sure you contact us to see if we can help.
Yeah, it's a huge problem. also sort of the impact on, speaking more broadly, the impact of sort of climate change on property values, and sort of people who've bought properties and have mortgages in places that are particularly prone to natural disasters and that kind of thing. What does that mean?
Yeah, and we've been writing about this a lot, and increasingly, I think, because if you think about, we had those big floods in Lismore here in New South Wales. When was that? 2022?
Yeah, I think so.
So we've had, actually, to be honest, they had multiple flood events in that sort of area, in the Northern Rivers area. But generally, we've seen so much damage to a lot of places, whether from flash flooding, from general flooding, from bushfires, that it's really impacting what the value of land and property is. So I know that the government last year released a big report about climate change and how it's impacting property. And I think we wrote a story for it on The Advisor talking about what this said. Can you remember the sort of highlights for those who didn't read it?
Yeah, I think the big headline figure was from the report was that the losses in property values could soar to $571 billion by 2030 under a high emissions scenario.
$500 billion in 4 years' time.
Which is, quite alarming.
That is high emissions scenario. You just said that. Sorry, I talked over you, so you might have missed that. So high emissions scenario. So what's that? A 3-degree increase in the next 4 years?
Yeah, so that was the worst case scenario modeling, in which temperatures rise by 3 degrees in that period. But yeah, it is quite sort of alarming because I think so many people purchase property on the sort of the predication that the values will go up.
Yeah.
It's sort of always going to be an appreciating asset.
Yeah. And especially for those, the sort of coastal properties like Coogee or sort of the coastal areas, those Point Piper here in Sydney, really expensive areas that have beautiful properties, but right on the coastal line. Like those areas are subject to things like coastal erosion. We've seen actually last year some landslides in those areas as well, cliff rock falls. So I think like looking at, well, what happens if your property suddenly is sort of worth nothing because of damage from coastal erosion,
and you still owe the bank,
and you still owe the bank millions of dollars.
Yeah.
So I think that's a big issue, of course, and really looks at, well, what happens to property values? Will they readjust that way? Something that people really have to consider. I, for example, live in both a fire and a flood prone area, which is really fun for us.
Yes.
So one half of my building, my house has like mesh on the windows because of bushfire risk, and then the other half is like a very damp garden because of flood. Like it sort of has a lot of water in the area. So it's kind of a weird one, which means my insurance premiums are deliciously high. But, thank goodness I still can get insurance, because that is also becoming an increasing problem, being like, will insurers actually cover these properties if they're in high risk areas? And that, of course, causes a whole heap of other problems for people trying to access a mortgage if you can't actually get insurance to cover it, because most lenders won't give you a mortgage if you can't.
Yeah, massive problem. I don't know what the solution is.
I don't know either. We should just all have a little think about it though. Be mindful of it. And I think this is also discussion for government and for lenders more generally, because of this big the government climate risk report that was released last year. It was the first one of its kind, actually, modelling the impact of climate change on the Australian economy. But I think also we have heard from insurers over the last few years talking about the risk of climate and how they actually cover these costs, because they're like, in some cases it's just not feasible to do it, so we'll just have to have uninsurable houses. And then what does that mean? Like, it's a can of worms. But on a cheerier note, outside of all the natural disasters, we have seen lots of activity in the broking industry, not just from brokers contacting their clients who might be impacted by the recent weather events, but also generally it's been a boom time for mortgage broking and finance broking. The last few months, even up to pretty much Christmas Day, I think people were working flat out. We've already heard from brokers this year as well, talking about what they're doing this year. And they were saying pretty much as soon as January 5th came around, the phone started ringing again. They were saying home buyers really wanting to get onto market before house prices accelerated too much further. Also, there's lots of chat about potential rate hikes. So people wanting to get into market now, maybe lock in a fixed rate, maybe look at, having a variable rate for a while that might be low before they potentially start increasing. And all the demand driven still from the new Help to Buy scheme and the expanded 5% deposit scheme. But aside of all that, we've also seen a lot of big changes in what the sort of broker industry has been doing. We've had acquisition mania in the first few weeks of January, and we'll get into that just after this message. So this year, 2026, already, we've had a number of brokerages announcing a range of M&A activity. Now, this is something that has really started being a big sort of theme, I think, over the last 2 or 3 years in broking, where we've seen fairly big brokerages, in some cases the top 25 brokerages in the country, acquiring other brokerages. Lots of consolidation in the industry. We've been talking about this for the last few years. We've been writing lots of opinion pieces. We've been seeing it increase. But particularly, I think the last 12 months, it's been a real theme. We've seen lots of brokerages either merge or acquire others. Now, the two main reasons that we've been seeing for those driving that M&A activity is either the first generation of brokers retiring. So lots of people looking to sell their business or sell their books as they look to retire. But also, I think just generally brokerages thinking, well, I'm no longer limited to my local geography. I can have a national presence. And now wanting to actually set up shop in other states or wanting to partner with other brokerages to take advantage of, their sort of speciality. And we've seen 4 separate brokerages in the last 3 weeks announce M&A activity or buying other offices.
Yeah, is that uncommon for this time of year, or is it just...
I feel like it was probably lots of people maybe doing it towards the end of last year, settling around December, but just sitting on the news until now. Yeah. So we're not actually reaching out to us until January, wanting to wait until, I guess, everyone was back. But yeah, the last 2 weeks, we've actually had 4 different companies announcing major expansions. And these are all pretty big brokerages. Yeah. So I'll just run through some of the big ones. So Flint, which is a New South Wales-based brokerage, and they have already opened a couple of other offices, have opened Flint Brisbane. So they merged with James Green and his brokerage up in Brisbane, and his team now joins. So they were previously with FPW Group. So the director and senior mortgage broker, James Green, now opened up with 5 brokers, Flint Brisbane. So that's one big one. Then we've also had Innovate, who is a Victoria-based or Victoria headquartered brokerage. Now that's headed up by Nick Riley, and they had already expanded to Queensland, I think, last year, and now they've opened up in Adelaide. Yep. So they've acquired Fresh Home Loans, which was a finance arm of a local real estate company called Owens Castley Real Estate. So they now bought that brokerage. We've seen ALEC, the Australian Lending and Investment Centre, announce that it's opening 2 new offices this year, one in Geelong and one in Hawthorn, I think, and looking at expanding out into a franchise model more broadly. Plus, Empower Wealth announced this morning that it's acquired Real Estate Home Loans. Again, part of this whole sort of getting bigger and bigger and bigger. And these are all really big brokerages. They're in our top 25. I'm not sure if Flint is actually. Innovate, ALEC and Empower Wealth are all in our top 25 brokerages ranking for 2025. Yeah. So really big brokerages just getting bigger and bigger.
I guess because brokers are doing so much business, this sort of expansion and as well consolidation, I suppose, has been one of the things we've expected to see in 2026. Quite a lot happening in the first week of 2026.
I know.
This week or two, but yeah.
And I think like when I was looking at the Empower Wealth one as an example, so Empower Wealth and Australian Lending Investment Centre and Innovate are all brokerages that actually specialise in investment property acquisitions and investment loans. So I think it's really interesting seeing this theme that it's the big investment kind of focused brokerages that are really expanding at the moment. They were all basically saying, we've had opportunities to really reach out into wider markets. So for them, it's about actually expanding out and not only servicing clients in other areas, but having a presence on the ground to be able to see them face to face, which I think a lot of them are sort of really saying that's the value, is that, of course, we can do this all remotely. We can do it all via Zoom or via phone or over, email, but we want to have people talking to our clients face to face because that's where we can really provide the best service. So really great to see that. And I think from the Empower Wealth one, which was announced this morning, they were sort of saying, it actually brings in a company that they've had for 25 years. So it's a really big, well-established company. It will look at sort of bringing in part of Real Estate Home Loans into the Empower Wealth Mortgage Advisory Business Unit. I think it actually settled on Christmas Eve. Okay. So they kind of obviously sat on that until everyone was back at work.
Yeah.
Which we are very pleased about. I wouldn't have wanted to be writing about it on Christmas Day, to be honest. No offense. Lots of moves here to kind of really expand out presences, whether in other markets or regionally, and having brokers helping them out. So interesting to see. And I really look forward to seeing how that impacts the rankings for the top 25 brokerages.
That's true.
Not this year, next year, because it goes financial year. So next for the 2027 top 25 brokerages, I imagine we'll start to see some of these positions changing as we have more consolidation. I think, though, just based on the fact that we've had 4 of them announced in the last week, in January so far, I already can see that 2026 is going to be another big year for consolidation. Yeah. And I think, lots of brokers really looking at, how do I stand out from the crowd? How do I ensure that I'm delivering a good service for our clients, but also able to kind of, grow, not just organically, but through acquisitions, and do it quickly. So lots of things to keep an eye out there. And I'm sure many people will be thinking, oh gosh, if they're growing, maybe I should be growing too. And how do I do it? If you haven't actually already listened to our podcasts on the Advisor Podcast Network, we have one coming up in a couple of weeks looking at how you actually fund acquisitions. So stay tuned for that one with Trailblazer Finance. That's not the only thing that's happening though in lending space. We still had many more changes coming through announced. Everyone's still looking at trust lending, and we'll get into the changes just after this. So at the end of last year, we had several lenders announcing changes to how they were treating their policies for company and trust lending. And we've had more again this year start to announce tweaks to their policies, really tightening up what they're doing when it comes to trust lending. ANZ was one that I think we heard from this month. Ben, what were they saying?
Yeah, so ANZ became the latest lender to sort of tighten its policy when it comes to lending, when it comes to mortgage lending to companies in their capacity as a trustee for a trust. So from last Thursday, which was the 8th of Jan, ANZ announced, did they announce, or was this just an email we saw?
It's on the 12th of January. No, we saw an email.
Oh, okay. I might just rephrase
it was from Thursday, but we announced it on the 12th,
Yeah. So from last week, ANZ has ceased offering home loans in a company to new customers if they were not already an eligible ANZ customer. And it said it was limiting even eligible borrowers to a maximum LVR of 70%. So it's kind of following similar moves we've seen from other majors, Westpac and CBA, that our readers and listeners would know about, but also the big one from Macquarie last year when they sort of announced
nothing altogether. They stopped altogether pretty much, yeah.
Yeah, a temporary pause to sort of lending to companies and trusts. So super interesting time to be looking at this space. And just today, this morning, we had another one come out. I think we published it on
Broker Daily, our sister publication. Yeah, so this was first Mac. And this one was really interesting to me because if we look at how the different lenders have been changing their trust policy. So as you said, Macquarie was pretty much a blanket. We're not doing it anymore. CBA, ANZ and Westpac were all kind of tweaking. So as you mentioned there, ANZ one was dropping the LVR quite substantially. So 70%, that's going to cut out a lot of people. And then I think a lot of focus on not really doing any new lending to non-customers. So no new lending to people who haven't already banked with the bank, particularly if they don't already have a loan with the bank. Really, if it's about buying a mortgage in trust. And I think the issues here have been around, are you genuinely buying a property in trust for a company, for company purposes, basically?
Yes,
or are you just a property, an owner-occupier wanting to buy a property for investment purposes and not really wanting to go through servicing? Now, there's a lot of conversation going around about should you allow them to do that? Should you not allow them to do that? But for lenders, I think they're just a bit worried because there's been a huge uptick in people buying property through trust. And really, that has been partly driven by unlicensed advice through social media platforms. Yeah,
I think that was one of the things that all the banks have sort of flagged when they've started talking about this thing, that, it seems like a bit of certain borrowers might find themselves in risky scenarios.
And really, if they kind of say, well, if we were looking at this loan not in a trust, this borrower wouldn't be able to service this loan. So we don't want people to be potentially, trying to circumnavigate serviceability, and in some cases maybe overextending themselves as well.
Yeah, because it really sort of is a mechanism that caters for a sophisticated investor, I suppose, not someone who's just trying to buy their first investor property. So.
Exactly. And I think what's really interesting is today, as you said, FirstMac, which is a non-bank lender. Non-banks typically have been scooping up all of the trust lending business that because of these banks tightening up. Really interesting to see FirstMac do it, because FirstMac historically has been pretty flexible with its policies, has been, as a non-bank again, its risk appetite slightly higher. And they have now come out saying, we're also tweaking our trust company and trust applicant policies. The thing that, again, it's sort of, saying it needs to be for certain things. So you can only accept company trust and self-managed super fund loans if the home and SMSF loan has the trustee in a corporate entity rather than any other kind of trustees, individual trustees, for example. But the thing that's really interesting is they were saying we want to see basically that all loans where the borrower or guarantor has provided a guarantee will need to be disclosed and included in serviceability. Now, this is a big change because it means that brokers firstly will need to obtain details of any guaranteed loans that the customer might have, including the relationship to the borrower, the purpose of the loan details. And also it means that they have to actually kind of only use the actual servicing from that. So they're not allowed now to, for example, provide an accountant's letter for positively geared trusts. And previously, I think lots of lenders would just say, if you have a positively geared trust, give us an accountant's letter and we can kind of, take that into account when we're looking at servicing. Whereas now they're saying it doesn't matter. We want to see all loans where the borrower or guarantor has provided a guarantee. And I think basically that means that will drastically reduce servicing for a lot of borrowers if they suddenly are like, well, actually, we do have other things that we're a guarantor for, or we have, more guarantees. We just don't normally need to provide that information to the lender in order to get this loan. So a big change here. And I think that's the first, if I've not missed anything, I think it's the first non-bank to really make a big move here. And I wonder how many others will follow suit. And FirstMac actually said to brokers, look, if the borrower or guarantor fails to disclose guaranteed loans, the application will be declined.
Yeah.
So being like, don't mess around here. We want to make sure that all these borrowers are actually giving us all of their liabilities and their assets, obviously, and that we can see exactly what their financial position looks like. So that's a really big one. I think a lot of brokers will be quite dismayed to see it because that would have been quite helpful for them in a lot of cases. But now looking at other lenders and being like, well, who can I send this loan to if more and more banks are tightening up? I think you've been talking a lot, Ben, recently to lenders around who's doing trust lending, and we'll actually be pushing out an ebook quite soon around this, looking at, well, what are all the changes, who's still in market, what are the concerns, and really kind of digging in a bit deeper into case studies of trust lending and being like, why is the market shifting and what are the solutions still available?
Yeah, I've been talking to a few non-banks on this topic, and there's still plenty of sort of lenders who are comfortable with this sort of segment. But I guess, there is that sort of level of, as I said before, it's kind of a product for sophisticated investors rather than sort of first-home buyers, not first-home buyers, but sort of owner-occupiers who want to get into investments.
Yeah, and I think this is something that, given the fact that so many lenders now have started moving, I would not be surprised if we see APRA soon being like, we're taking a look at this, or even ASIC being like, we want to have a look at how people are lending to trusts because of all these tightenings coming on. There's obviously a broader problem that they're trying to stop. And in this case, it might be that either they're just overexposed, or it might be that maybe they're worried about the clients coming through trying to circumvent servicing, or it might be they're just like, you know what, trust lending's pretty hard, we don't want to do it anymore.
Yes, yeah. Well, in many ways, I think a non-bank is kind of well suited to sort of catering for this because, that sort of level of automation that a bigger lender might be sort of striving to achieve might not be possible with these kind of loans. But yeah, it will be interesting to see what happens in this space in the immediate few months, definitely.
Yeah. And I think the other thing that is sort of top of mind for people is being like, well, are we actually seeing genuine trusts being, like, how are they being structured? So again, looking really closely at what is the trust, who is the trustees, are they, you know, for example, foreigners, and they're trying to get around Foreign Investment Review Board requirements by purchasing a trust? Are they trying to do something else? So really just closely looking at who are these trustees? Why are they being set up? Are they being set up correctly? And are they really appropriate means of purchasing property through? So lots of property investors who do genuinely use purchasing properties and trust, I think, will be kind of annoyed. They'll be like, you know what, this is going to be a problem for us. And I think obviously a lot of brokers who specialize in property investment being like, what a headache. We're having to constantly review policies now.
Yeah.
Well, that was a big week. That was a big week for news. And of course, we've got a couple more weeks before we have the Australia Day holiday. And I imagine more and more people will be coming back into work. So we expect that the news cycle will continue to boom. If you've got any news for us, do feel to reach out. You can reach me at editor@theadvisor.com.au. Of course, take a listen back as well to previous episodes on the Advisor Podcast Network to find out what else has been going on, to hear interviews with leading brokers, to hear interviews with lenders and aggregators around what they've been seeing and doing to help the third-party channel. And we look forward to catching up with you soon for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.